When President Trump announced the launch of the new Trump accounts today, the reaction across global trading floors was immediate and volatile. The rollout of this initiative instantly directed massive amounts of capital across both legacy equities and digital assets. When asked about the potential for Bitcoin integration into the new accounts, the president referred to himself as a big crypto guy, a comment that quickly pushed Bitcoin prices into the green. That upward price action is notable, given that a massive government treasury launch dominated the daily news cycle. Meanwhile, in a separate but significant market move, Michael Saylor's MicroStrategy sold off $216 million in Bitcoin to fund its shareholder dividends. On the traditional equity side, Dell shares experienced a sudden surge after receiving a direct presidential endorsement to go out and buy a Dell computer. That endorsement directly followed a pledge of $6.25 billion to the Trump Accounts program from the company's founders, Michael and Susan Dell. The volume of capital moving in response to today's announcements highlights how this policy is actively reallocating billions in corporate wealth and shifting sentiment across global markets. Treasury Secretary Scott Bessent, who previously managed the Soros Fund for decades, is overseeing the architecture of this rollout. This data visualization highlights the core problem the Treasury is trying to solve. 38% of American families currently have zero exposure to the equity market. They are completely locked out of the nation's capital growth. To close that gap, the program initiates a $1,000 seed investment from the government for every child born during the current administration's term. There are already 6 million active signups, with $1.4 billion officially designated for these eligible children. Looking at this breakdown of the capital stack, we see that the accounts are funded not just by the federal seed money, but through a layered combination of state contributions, private philanthropy, and employer matching. Private wealth is already flowing into the system. According to the Treasury, one of the founders of SpaceX has contributed 2 million shares of their company directly to the program. At the government level, 23 states have committed to making additional contributions to these accounts. The structure essentially acts as a massive financial gravity well, pulling disparate sources of public revenue and private wealth into a unified investment block for the next generation. When trading began today, the default vehicle for all of this incoming capital was set to a State Street S&P 500 Index ETF. This chart compares standard management fees to the expense ratio negotiated for these accounts, which sits at just 2 basis points, or 0.02%. By dropping the fee to practically zero, the investors, these children, get to keep almost 100% of their market gains over the entire life of the account. Traditional financial advisors have expressed open skepticism about the program, largely because this fee structure cuts them out entirely. There is no money for them to make managing these funds. To support the millions of newly invested families, the Treasury also launched a suite of 15 educational modules on trumpaccounts.gov, teaching basic financial literacy. The mechanics of the program are heavily weighted against the traditional Wall Street middleman, prioritizing absolute long-term compounding over industry profits. The mathematical foundation of this initiative relies entirely on 18 years of uninterrupted compounding before the account holder can touch the money. This timeline illustrates what happens at age 18. The young adult takes control of the funds and can direct them toward major life milestones, starting a business, paying for education, or making a down payment on a house. If they don't need the capital immediately, the balance can be rolled straight into an IRA to continue growing toward retirement. While the $1,000 seed is strictly for newborns, older children can also be registered to receive the philanthropic donations, state contributions, and employer matches. Right now, the investment strategy is kept simple, but the Treasury plans to roll out more customized investment choices for parents in the coming months. Secretary Bessent expects a steady stream of major announcements as more corporate founders donate large blocks of single stock to the initiative. With 6 million initial signups, near zero fees, and an aggressive financial literacy push, the program is gathering immediate momentum. Despite pushback from the legacy advisory industry, the launch establishes a massive structural framework aimed directly at building systemic, generational wealth across the American public.